expectations. It also missed top-line forecasts in the third quarter, and Texas Instruments had previously warned that a slowdown in demand for microchips would actually last a while. So you can see it's having ramifications across the European chip maker sector today, all of them trading in the red. Elsewhere, the impact of trade tensions is also echoed in major European earnings releases. The ABB has warned about weakening conditions in the US and China, blaming the trade war for a fall in orders. Now, the chief executive, Peter Voser, said the robotics and automotive divisions were under the most pressure, but the Swiss industrial group beat expectations in the third quarter as a 15% drop in net profit was not as steep as analysts had anticipated. So actually, on the back of that, putting it all together, we've got ABB trading up north of 2.5 percentage points. Moving to the beer space, Heineken has also narrowed its profit forecast for the full year. The world's second biggest brewer has predicted that operating profit before one-offs this year would come in at around 4%. That is at the lower end of its previous guidance. Now, this despite posting a rise in beer volumes in the third quarter, as a decline in the American market was offset by double-digit growth in Asia-Pacific. Heineken down 2.4%. And then finally, PSA Group, Peugeot, has posted a rise in third quarter revenue as demand for its high-priced SUV models helped compensate for flagging global sales and negative exchange rate effects. But the Peugeot maker says it expects to see revenues shrink in all major auto markets this year. They were down about 40% in China, the earnings today. So PSA trading up at around 2%, giving a bit of a boost to auto on a day when most of these European indices are trading in the red. Juliana?
Jumana, thank you very much. Well, let's get right into the top political story of the day. British lawmakers voted to proceed with Boris Johnson's new deal with the EU, but moments later, MPs rejected the government's timetable for approving the agreement. It is now up to the EU to decide whether to grant the UK an extension to next week's October 31st deadline. Willem is in Westminster. Willem and Sylvia, as you can see there, is in Brussels. Let's start with Willem first. Willem, Boris Johnson managed to achieve what Theresa May never did. He got his deal through, but that crucial timetable, he didn't manage to get that through. What did last night's vote numbers tell us?
Well, what he got through last night was the proposition in principle of his deal. And what that shows is that not only if you look at the numbers on his party side, the Conservatives, he managed to unite his entire party. All 285 Conservative MPs voted for the deal. He also got at least 3 times the number of Labour MPs to, in principle, push forward with his deal. And that's a lot more than Theresa May was ever able to do. We also now know that the DUP, the Small Northern Irish Party, is emphatically opposed to this current Brexit agreement. So what we've seen is, although he managed to get a 30-vote majority yesterday, the sands underneath his feet in terms of the parliamentary numbers have shifted somewhat. It is clearly a positive development that there is now a majority in favour of at least looking at a deal as opposed to what we've seen in the past. But as you mentioned there, that programme motion that was defeated, the timetable for Parliament, showing that some of those lawmakers, although they might like some elements of the deal, they do want to have more time to try and change things, to scrutinise things, and that might be why we saw that programme motion, the timetable, defeated yesterday.
From Westminster. And now let's get out to Sylvia, who joins us from Brussels. And now the ball firmly in the EU's court. What can you tell us, Sylvia, about the potential extension we could see offered from the EU?
As you said, Juliana, the eyes are now on the European Union, whether it will say yes to a request for an extension and how long that third delay will be. Well, we don't know when the European Union is going to take that decision. That's still very much up in the air. I asked a few officials, though, here in Brussels, when we could expect news from the 27 European capitals. One official told me that this decision could happen as early as tomorrow, but the same person also told me that this decision could easily happen next week. A second official working here in Brussels told me that there's no clear indication when the EU will make that decision, whether it will say yes to the request for an extension, but very much will depend on the talks that right now are happening between Donald Tusk, the President of the European Council, and the different European governments across the 27 European capitals. Having said that, though, we need to bear in mind that we cannot prejudge how the EU will respond to this request for an extension. the European law makes it very clear that the EU needs to come up with a unanimous decision. So in other words, if one country raises problems, raises concerns about granting a third delay, about granting an extension until January 2020, then the leaders could take some time to make that final decision. We could potentially see them gathering here in Brussels for an emergency meeting. And finally, let me just remind our viewers about the implications of another delay. Let's not forget that the Brexit process doesn't end here. We have still the phase 2 of the Brexit process to go through, of course, when the EU and the UK discuss their future trade relationships. And of course, if we get now an extension until January 2020, then there's going to be less time to discuss how that trade relationship will move on, how it will take shape in the coming years.
So in other words, Sylvia, there's no risk of us not talking about Brexit for at least another 2-3 years. All right, Sylvia, thank you for the breakdown from Brussels. Let's bring in another Sylvia Ardagna, Managing Director in the Investment Strategy Group from GS Private Wealth Management. Sylvia, it's great to have you with us on the show. Have you done any analysis on what sort of upsides a Boris Johnson deal could present to the UK economy and the European economy if indeed it does eventually get passed somehow?
Yeah. Thank you. Good morning, and it's a pleasure to be here. Yes, we have done some analysis, and what we would say is that the development of the last few days or weeks have clearly diminished the risk for a hard Brexit, have clearly diminished the near-term uncertainty that there is around this process. So from the economic perspective, what our analysis shows is that the UK economy should have some better momentum into the end of the year, at the beginning of next year, in terms of having some rebound in investment spending. What we have seen so far is that the UK economy has underperformed all the other G7 countries. So it used to be at the top of the pack in terms of growth rates before the referendum, and then it has moved below. So we expect some, pent-up demand that could basically develop in the next few months. We agree with your colleague, however, that the near-term, lower uncertainty does not really translate into, a permanent lower uncertainty. There is a lot that still have to go on. And so that clearly will be relevant for asset markets.
And from a European perspective, just honing in on what this deal could mean for them, what kind of upside could we see for Europe as opposed to the UK?
Again, there is some work that we have done, some work that the IMF has just presented in their latest, World Economic Outlook that shows that even European growth has basically been affected by the Brexit uncertainty. The numbers are not that large. We are talking about, 10, 20 basis point in terms of, percentage point of growth, but still, removing the tail risk of a worse scenario is going to be positive also for the European economies. In particular, if you think about Germany, it has been negatively affected by, development in the car industry. That has been due to a variety of factors, to the regulation changes in Germany, to the fact that demand is slowing in China, and there has been some removal of tax benefit in China, subsidies in China for demand for cars. But it also has reflected, the integration that the auto sector has between the UK and the European continent. So some removal or some of that will also be positive for Europe.
I want to take you along a slightly different gear. Tomorrow we have the ECB meeting talking about the European economy. It's going to be special not because of what's expected to be announced, but because it's President Draghi's last meeting ever and last press conference. What do you think? I mean, obviously he was there for 8 years and accomplished a lot in that time. But what do you think today is the key message that is coming out of the ECB? And what is the message, do you think, that Draghi will really like to hound to people watching?
I think two messages, will be key in this press conference. One is clearly the ECB has taken, a bold package of measures at the last meeting. So one message will be this package will be sufficient to bring higher inflation. And, we need to be patient, but we are there. We want to meet our mandate. And again, we have already delivered. So you will try to tell market, believe me, these messages will be, quite large, have been quite large, and will have a positive effect on inflation. The second message that I think he will continue to deliver to policymakers and to markets is that monetary policy cannot be the only game in town, and so that politicians will also have to be ready to deploy some more fiscal easing, particularly in countries where there is fiscal space. Now, it is complicated in Europe because obviously if you look at the euro area as a whole, the fiscal position of the euro area is much more sound than the one in the US and in Japan. But as we know, there is a lot of heterogeneity across the various countries.
I was looking actually at some charts that you sent beforehand, comparing the fiscal easing that has happened today versus what happened in 2009, 2010. Obviously, different situation then because it was post-crisis, but still it does tell you that the fiscal easing that the Germans like to talk about, even though they're still technically in a surplus, is nothing. It's about a quarter of what they did back in 2009, 2010. So how bad do things need to get in order for us to start seeing the German spendthrift engines get out there?
It's very interesting that you had this reading of the charts. My reading and discussion also with our clients or with my colleague is a little bit different. When you think about fiscal easing, it can come in different forms. One part, it's what the economists call discretionary fiscal easing, so what authority decide regardless of the state of the business cycle. And then there is, part that it comes as part of the automatic stabilizers. When you are in a recession, when you are in a slowdown, obviously unemployment benefits go up, tax revenue goes down, and so there is some automatic, fiscal easing that comes in. If you look at the discretionary part, given the state of the economy, actually, Germany has basically included in its draft budget 0.75 percentage point of fiscal easing, which is not that small compared to what was done as a discretionary part in 2009, 2010. The majority of the easing back then came from this automatic stabilizer part and from one-off tax cuts. So when we think about today, one, I think it's important that all the easing that is in the budget plan gets really delivered, because it is also true that Germany has a history of under-delivering relative to what is in the draft budget. Mm-hmm. And then clearly, I think if the situation worsens, if Germany were to get into a recession, then we also expect some additional one.
So keep an eye on the automatic stabilizers. Sylvia, thank you so much for joining us. Sylvia Ardagna, Managing Director in the Investment Strategy Group from GS Private Wealth Management. And also coming up, as I just hinted, we'll take a look back at Mario Draghi's tenure as the ECB president on the eve of his final policy meeting ever. We'll be right back.
Larry, you're coming in through the sewer. You have your snorkel?
Got it.
Janet, I hope you're not afraid of heights.
What's going on in here?
My IT staff.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its symbols when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
Get ready for Brexit on the 31st of October. Find out what you need to do to prepare at gov.uk/Brexit.
London, switch to Vodafone, the UK's best mobile network, and be unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hey you. Yes, you. We didn't make Nature Valley nut butter biscuits so you could just sit and munch them on the train. Not when there's a whole forest out here to explore. Isn't that right? Go get it! Delicious whole grain biscuits with a real nut butter filling. Nature Valley nut butter biscuits. Get out more.
Will cancer affect my sex life?
Your sex drive can disappear. The side effects may stop you.
Sex life can easily stay.
When you search one question about cancer, you end up with millions of results which contradict each other. For clear and uncomplicated information, come to Cancer Research UK. Visit us online or give us a call on 0808 800 40 40. Cancer Research UK. Together, we will beat cancer.
What can you get from Tesco for £1 each this Halloween?
A pumpkin.
More.
A spooky pumpkin cup.
More.
Ghostly balloons. Spine-tingling spider webs. Ghoulish plates and napkins.
More. Yes, it is scary what you can get for just £1 each this Halloween.
Tesco. Every little helps. Available in selected larger stores.
Sean, tell us about your upcoming Shaun the Sheep movie.
Oh yeah, that was a good bit.
Really? I never looked at it that way. Wow, you do your own stunts. Wait, that's my line. See Farmageddon, a Shaun the Sheep movie, as part of your year of endless adventures with Meerkat Movies. Oh, spoiler alert. You just gave away the ending.
Qualifying purchase required. Tuesdays or Wednesday. Participating cinemas. Standard ticket only. Cheapest ticket free. One membership for 12 months. Conditions apply.
Welcome back to Street Science. Well, we are one day before Draghi's last ever press conference that is set to take place tomorrow. So today we're taking a look back at some of the key moments in his legacy. For some, saving the euro will be how Mario Draghi's legacy is defined. For others, it will be a ballooning balance sheet. But what is widely agreed is that he transformed the European Central Bank during his 8 years at the helm. So as we near Draghi's last policy meeting, let's take a look back at some of the key moments in his ECB career, starting with a surprise rate cut November 1, 2011, just 2 days after assuming office, setting the tone for how he intended to fight the sovereign debt crisis, breaking away from his predecessor Jean-Claude Trichet, who's probably mostly remembered for that surprise hike in 2008. Never really lived that one down. So Draghi's first date, November 1, 2011. Now, 8 months later, history was made. He uttered 3 words that arguably saved the Eurozone economy and kept the bloc together.
Within our mandate, the ECB is ready to do whatever it takes to preserve the euro. And believe me, it will be enough.
Whatever it takes, and believe me, it will be enough. Now, 2 years later, June 5, 2014, with the region still in crisis, Mario Draghi went negative, cutting the deposit rate for banks to minus 0.1%.
I would say that for all the practical purposes, we have reached the lower bound.
Roughly 1 year later, growth was still weak and deflation a lingering risk. So Draghi dug deep into his toolkit and launched a sweeping bond buying program called quantitative easing. Now, in December 2018, so last year almost, following an economic recovery, the ECB stopped those purchases, and it seemed the scheme was over for good. But as uncertainty over Brexit and global trade tensions picked up, and Germany teetered on the brink of a technical recession, the central bank reintroduced QE last month in what many consider to be Draghi's parting gift.
The Governing Council decided to restart net purchases under its asset purchase program. We expect them to run for as long as necessary.
Now, our colleague Jeff spoke to a range of policymakers at the IMF meetings in Washington last week and asked them about the ECB's push into negative rates.
We have done a lot of analysis. At the end, we concluded that the package that we put together would be beneficial, and even the elements of the package taken one by one would have a positive effect, up to a point. And I think we are very close to that point. I don't want to pass the point, and I don't want to end up in a trap of negative interest rates.
And I also thought that negative interest rates is not a very good idea economically and socially. So I decided to be outspoken and to change the atmosphere and the tone in which the discussion has taken place so far.
There's all sorts of effects. It affects people with small savings. It affects our pension sector. But at the same time, it also opens up opportunities for government investments.
And the question for Europe is to take the structural measures on one side and to support aggregate demand on the other side. Supporting aggregate demand means fiscal policy. Structural measures means economic policy. And this is out of the mandate of the ECB.
All right, let's get out to our ECB watcher, local ECB watcher, Aneta, who joins us live from Frankfurt. And Aneta, I was just going over very quickly some of the key points of Draghi's 8-year history at the ECB, and it's pretty remarkable. We all remember the days when people said ECB will never go negative, ECB will never do quantitative easing, and yet here we are many years on, the most negative the interest rate has been, another round of quantitative easing, and yet Mr. Draghi, looking at his final meeting tomorrow, is coming under a lot of criticism, not least by your German compatriots in Frankfurt. So what do you think is going to be the tone of the press conference?
Well, of course, there will be loads of questions how bad the rift is inside the Governing Council and why that decision had to be taken and why he still believes that this had to happen in September, and whether this is also not sort of a very big preconditioning of what Christine Lagarde can actually do as the new ECB president. Because if you look at the market expectations, her hands will be pretty much tied, at least for the end of this year, and most likely also for the full year next year. Because what can you do more, in a way, given the big rift inside the Governing Council? But let me broaden up the picture a little bit, because Mario Draghi really presided over a completely makeover of the European Central Bank when the European Central Bank was created, and also pretty much under Trichet's reign. She was still more or less modeled after the Bundesbank, a very conservative central bank, and Mario Draghi really opened it up. He was introducing all these new policy measures with the help of Peter Pratt, not to forget him as well, and he opened the central bank up, or remodeled it more or less towards an Anglo-Saxon type central bank, which is more creative and more proactive as well in tackling inflationary problems. So I had the pleasure today also to speak to Erkki Liikanen, who worked together with Mario Draghi for 14 years at the ECB in his capacity as the head of the Finnish Central Bank. And I asked him how big his surprise was to the words, whatever it takes. Take a listen.
We discussed together a week or two before that we must be ready for any situation. We must have a credible central bank who has power to act without predetermined limits. And if necessary, we must take decisions also, so that we do it with consensus or with majority. So it didn't surprise me totally. But of course, one moment came, the reactions, how strongly it was felt, surprised me on the upside.
So what made Mario Draghi also very special is that he kind of changed how he was perceived during his 8 years at the top of the central bank. When he started his job, at least the German public was thinking that he's just like a German Italian and completely in line with the Bundesbank thinking. And now, after 8 years, we all know where the Bundesbank and he are standing. They're not very much aligned. With that, back to you.
Aneta, thank you very much, and we look forward to your coverage tomorrow at that milestone meeting. Well, let's push on and talk about one of the corporates in focus this morning. Hydro is trading near the top of the stock 600 after posting better than expected third quarter earnings. The aluminium producer said lower costs had offset soft metal prices and pointed to a turnaround in its Brazilian unit. Now we are joined by the CFO of Hydro, Paul Kildemo. Thank you very much for joining us this morning. So a stronger set of results than the market had been expecting, and your shares have reacted quite positively as a result. How much visibility do you have for the rest of the year? Can this positive momentum continue?
I think it's a combination of two factors which are influencing us today. And on the one side, an area where we have quite good visibility is what we're working on ourselves. And we've been ramping up our Brazilian operations following the embargo situation that we were in last year. And this we will continue to do also into the fourth quarter and next year. This in time will bring down costs and also improve profitability on a standalone basis. The other area where we have less visibility is, of course, on the demand side for end products. and ourselves, as the rest of the industry, are seeing somewhat weakening demand both in Europe and North America in the coming period.
So fairly cautious on the demand side, I suppose, will not come as a surprise to anyone. But you have initiated a strategic review and comprehensive restructuring of your rolled products business. And I understand this is to mitigate the declining profitability that you've seen here. Can you give us a sense of what we're talking about in terms of job cuts in this area and what kind of savings we're looking at?
Yeah, so for the rolling operations, profitability hasn't been too good over the latter years. And that's why we initiated the restructuring program and also a strategic review of our operations. And following a full potential review of the business area, we target to improve our operations by around 0.9 billion NOK by 2023. This comes with some reduction in capacity. We've closed part of our foil operations, which are experiencing lower margin than the rest of our portfolio. And that also comes with a demanding of around 700 to 800 people, which impacts restructuring costs for this quarter.
And sir, in your outlook today, you talk about your revised demand outlook for aluminium. You see it lower than where you had anticipated in the past. But where does that leave overall supply demand? And what does that mean ultimately for prices, aluminium prices, looking ahead to 2020?
If you look at the global aluminium demand, then it has come somewhat down in 2019 compared to the expectations we had earlier in the year. The overall balance is still an undersupplied situation for 2019, driven a lot by curtailments of capacity, especially in China. But as we move into 2020 with a more flat demand expectations compared to what we're seeing this year, markets are moving more into balance. Right. But for aluminium, I would just like to stress that there are some segments which are standing a bit out. For example, the can segment is now really experiencing quite strong substitution effects away from plastic, which is helping the demand picture.
And actually, just speaking about that, in terms of individual sectors, are you realigning your business strategy and moving away from low growth area into high growth areas such as transportation?
Yeah, I think if you look at what we've done over the latter years, it's been very much shifting our focus into transport and automotive, both in Europe, but we also have exposure there in North America. And here we continue to see growth in the rolling area because of high substitution. But on the absolute level, we are, of course, seeing somewhat lower demand for transport as the industry is seeing as a whole. But a lot of this is being compensated by what we're seeing on the can market side now. So our recent announcement at the Investment Day was shifting quite a lot of our volumes from foil into can now to take part of the growth in that market.
Makes a lot of sense. All right, Paul Kildemo, thank you very much for taking the time to chat to us. That was the CFO of Hydro, Paul Kildemo.
All right, well, coming up on the show, China hits out after a report suggests Beijing is drawing up plans to replace Hong Kong Chief Executive Carrie Lam. We'll discuss after the break.
Do you have concerns about mild memory loss related to aging?
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
They don't chant your name when you give blood, or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
Breathe in and out. Every day
you take 20,000 breaths, potentially exposing yourself to harmful particles of pollution. According to the Royal College of Physicians, air pollution contributes to around 1 in 20 deaths in the UK. But at E.ON, we believe it's time to do something about it. We've committed to installing ultra-fast electric vehicle charge points. We offer solar panels and batteries that collect and store energy. And we've helped a citywide transport operator introduce a large fleet of emission-free electric buses. It's time to clear the air. Search E.ON Clean Air.
London, switch to Vodafone, the UK's best mobile network, and be unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hey, you. Yes, you. We didn't make Nature Valley nut butter biscuits so you could just sit and munch them on the train. Not when there's a whole forest out here to explore. Isn't that right? Go get it! Delicious whole grain biscuits with a real nut butter filling. Nature Valley nut butter biscuits. Get out more.
Welcome back to Street Signs. I'm Juliana Tattlebaum.
And I'm Joanna Versace, and these are your headlines.
European equity markets take stock as UK lawmakers reject the timetable to pass Boris Johnson's Brexit bill, putting the ball back in the EU's court.
The EU must now make up their minds over how to answer Parliament's request for a delay. And the first consequence, Mr. Speaker, is that the government must take the only responsible course and accelerate our preparations for a no-deal outcome.
A stark outlook from Texas Instruments chips away at European semiconductor stocks. The U.S. tech bellwether lowers its profit forecast for the year, blaming the U.S.-China trade war.
ABB trades higher as third-quarter net profit falls by less than expected, but the Swiss industrial group warns of weaker conditions in the U.S. and China.
And a bitter taste for Heineken. Shares fizz lower after the brewer says operating profit will come in at the end of the lower guidance following a weak performance in the Americas.
All right, well, it's a bit of a mixed picture coming together here in Europe in terms of equities trade this morning. The Italian and French indices are trading below the flat line, but we've got some green coming together for German stocks. The DAX trading about 0.8% higher, and the FTSE 100, clearly the outperformer here. The UK benchmark is up about 0.4%, but this, of course, comes as we've seen a pullback in sterling overnight and now again this morning. And this, of course, comes on the back of last night's Brexit developments with Boris Johnson successfully getting approval for his Brexit deal in principle, but then not getting approval for the timetable. So the big question now, how the EU decides to respond with regards to offering an extension to Boris Johnson and the UK when it comes to that October 31st deadline. How long will the extension be? Should they proceed with it? That's the key question that investors are waiting for this morning. Let's take a look at FX markets and see where we stand in terms of sterling and the broader currency space. Sterling currently trading around 128.55, so down at more than 0.1% this morning. The euro, meanwhile, really holding steady around 111.21. And you just got that a terrific overview of Mario Draghi's tenure at the ECB before the break from Jumana as well as Annetta. Tomorrow, of course, being his final meeting at the helm of the central bank. And we will be looking to that in more detail. And the euro is currently basically flat ahead of that meeting. And taking a look at U.S. futures, where do we stand in terms of the Wall Street Open? The three major indices are looking at a fairly muted start. But important to note that after markets closed yesterday, we did see a pullback in Texas Instruments, a very report there, and that's going to be taking focus in the U.S. today, as it is here in Europe, weighing on those European chip makers. Jumana?
Thanks, Juliana. Now, a political rumor with ulterior motives. That was the response this hour from China's foreign ministry to report that Beijing was planning to oust Hong Kong Chief Executive Carrie Lam after months of anti-government protests. Now, the Financial Times had reported the central government was set to force Lam out in March and install an interim leader. Eunice filed this report from Beijing.
Beijing is reportedly drawing up plans to replace embattled Hong Kong leader Carrie Lam. The Financial Times is quoting sources as saying that an interim chief executive would be installed by March and serve out the rest of Lam's term, which lasts until 2022. It's widely believed that Lam has seriously mishandled several decisions that sparked the massive protests months ago and which have fueled anti-Beijing sentiment. Authorities here would likely be careful, not wanting to appear as though Beijing is caving to pressure from the protesters. The FT quote sources as saying that Beijing would like to see the protests die down further before making a switch public. In fact, any speculation today departure is being heavily censored. So who would replace her? The FT says one possible successor is a son of a textile tycoon, former financial secretary Henry Tang. Tang campaigned for the job in 2012 and was favored by Beijing then, but ran into local issues. Another option is the former head of Hong Kong's de facto central bank, Norman Chan. He's been a defender of the Hong Kong dollar peg. Two other potential candidates are the current financial secretary and an advisor to Lam, but both are seen as too close to her. The timing of her replacement would be interesting because it would be made in time for annual parliamentary session, the National People's Congress. President Xi Jinping would have to sign off on a switch. It's still unclear, though, how much her replacement would placate the protesters and ease the rift between Hong Kong and Beijing. Eunice Yoon, CBC Business News, Beijing.
And meanwhile, back here in the UK, property developer Nicholas Candy is eyeing a takeover of Capital & Counties, the London real estate company that owns Covent Garden and Earl's Court. Interest from Candy's investment vehicle saw Capco shares jump almost 9% at the start of the week, although it says it has not yet been approached by Candy or any other bidder. Now, more than half of executives are actively planning to pursue M&A in the next 12 months, despite macro headwinds, according to a new report from EY. The U.S. still takes first place in the consultant's list of top investment destinations, with China coming in at number 4, despite trade tensions. The UK is also in the top 5 as Brexit uncertainty draws interest from foreign investors. Now, Steve Kruskos, Global Vice Chair, Transaction Advisory Services from EY, now joins us with more. I want to just kick off on the back of that Capco story. At the start of the week, we saw Capco shares jump on the back of a potential interest from a bidder for those Covent Garden and Earl's Court assets. Just looking at the UK more broadly, you can't ignore the timing of this story, that we are just entering crunch time for Brexit, and we see this interest in UK domestic assets. Do you think we're going to see more of that as we enter what could be the final stages of Brexit?
Well, Juliana, I think you have to peel back and look at what's happening overall in the M&A market. And what our survey is telling us, what's happening. 52% of the companies surveyed are planning to do an acquisition. And that is because the imperative to transform your business exceeds the downside of uncertainty. As long as that happens, as long as that continues, the M&A market continues at a strong pace. You say, why is that happening? Because there's so much competition for talent and technology. You have to move at pace, and buying versus building is often the best or fastest way to acquire an assets. Then you say, how is it happening? There is a ton of dry powder out in the markets right now. You look at private equity, family offices, corporate balance sheets, sovereign wealth, on and on and on. Probably 40 trillion of capital that's available for acquisitions. So when you come back to your UK question, the UK is no different than any other market. Great talent, great technology, CEOs with an imperative to act to protect and grow their business. And while, yes, there could be some uncertainty before and after, if a hard Brexit decision were to come, call it, a few weeks before, a few weeks after, where maybe that equation tilts, right, and uncertainty overtakes transformation. But otherwise, I think you'll continue to see the imperative to act.
That's fascinating that the push to transform is trumping uncertainty, as you say. What about for cross-border deals specifically? Obviously, the trade war and protectionism creates a difficult landscape for deal-making. So how have you seen an appetite for cross-border deals evolve?
Well, it's interesting. The cross-border deal activity this year has not been much different than what we've seen historically, perhaps just a little bit lower. Our survey would suggest an uptick in cross-border activity over the next 12 months. Why is that? markets are global. Customers are global. Customers have choices of where to buy, what to buy, when to buy. And, that is tearing down sort of geographic boundaries. So as difficult as trade and, trade tariffs, trade wars, regulations can make the environment, and you have to consider that very carefully. At the same time, again, the imperative to act, the imperative to transform your business today, I think, is greater.
I want to pick up on a number you just mentioned that I thought was quite startling. $40 trillion sitting on the sidelines available for acquisitions. And then I also saw in your report that 58% of correspondents also expect an increase in hostile and competitive bidding over the next 12 months. Is that a coincidence, or is it a function of so much money sitting on the sidelines, so few opportunities, that the only alternative is really to get competitive and quite hostile in some cases?
Well, I think there is a lot of money sitting on the sidelines. And what you've got to understand when you look at hostile bids, very few of what might originate as a hostile or an unfriendly approach actually, turns out that way and gets publicized as such, right? Because very often it might be an insider, a related shareholder that's sort of agitating for change, lobbying for change. That happens, a deal gets done, and it never quite gets labeled as hostile in the press. And I think, yes, we have seen more of those situations where there's agitation for change, agitation for value creation, and as our survey indicates, we expect more.
How is private equity distorting the landscape? And I do wonder, given that there have been so many IPOs that have done remarkably badly in secondary performance after the launch this year, is there actually, do you see a trend moving from public to private? A good example of that would be, overnight, the talk of SoftBank acquiring a bigger stake in WeWork. Is that a trend that you continue to see in the future? How is it changing the landscape?
So that's a great question. We definitely see companies staying private longer, right? Because there's more options for them to fund and more options for them to obtain capital for their businesses. Now, some people have said that, this is the year where public meets private, right? Where some of these bigger unicorns, bigger private companies do go to the public markets. And certainly there have been a couple that have been publicized that haven't performed as well. But by and large, on average, the IPO performance has been pretty good. And so you have to, assess the challenge or ask the question of, what is your investment horizon, right? Public markets looking at a shorter horizon, private investors looking at a longer horizon. What is the right value for a company? What is the right point in time for it to go public? Those are different decisions, different factors for different companies.
Now, another interesting point in your report was around the desire for Asian companies to acquire European intellectual property. Of course, we know they've wanted to for quite some time, but given the way the trading landscape is developing between China and the rest of the world, have we seen any pullback in appetite from these Asian companies given the difficulty of getting these deals through from a regulatory and political perspective?
I don't think you've seen a pullback in appetite. In fact, I think you're seeing an increase in appetite, and you've got to also think about Japan as being part of that equation too, and more activity with Japanese companies going outbound as well as investments going into Japan, by the way. So I think the appetite is still there. I think companies are navigating, the trade difficulties. Certainly the U.S. is not any easier than Europe right now, right? So you've certainly seen a decline in sort of Chinese investment into the U.S., for example. But no, I expect to see continued demand into Europe and into the UK.
All right, so well, thank you very much for that detail. Steve Kruskos, Global Vice Chair, Transaction Advisory Services, EY.
And stay with us, because coming up on the show, SoftBank, as I just mentioned, takes a majority stake in WeWork as it looks to turn around the embattled office-based sharing company. Find out how much the former CEO Adam Neumann could be paid right after the break when we come back.
There's golf. And there's the golf lifestyle.
I've got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. Then it was time for glow-in-the-dark mini-golf. I got a hole-in-one. Well, 3. I'm a bit rusty, okay? There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
1 in 10 Londoners surveyed said they'll give more to charity in the next 12 months. Are you one of them? At CAF, we help generous people like you support their favourite charities by making giving simple. And we provide charities with the tools they need to perform at their best. So together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Get ready for Brexit on the 31st of October. This means that travelling to the EU will change. You'll need to check online if your passport is valid for travel to Europe. If you're planning on driving, you'll need to check if you have the right documents to drive. And make sure your travel insurance covers all your healthcare needs. To keep your trip on track, check what you need to do at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want crime dramas, I've got loads. And they're never going to guess who did it. Thrillers, they're going to be on the edge of their seats with these. Or how about sports? These games are unmissable. Get in. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto renew, terms apply.
Welcome back to Street Signs. Shares in SoftBank dipped after the Japanese tech company agreed to take a majority stake in WeWork. The deal will see SoftBank up its investment in the office space sharing firm to more than $13 billion. WeWork will also be valued at $8 billion, down from the $47 billion valuation targeted by the company before a failed IPO attempt earlier this year. Meanwhile, the Wall Street Journal reports former WeWork CEO Adam Neumann will be paid as much as $1.7 billion in exchange for his voting rights.
A cool $1.7 billion. Elsewhere, shares in Snap fell in extended hours trading after the social media company provided lower than expected fourth quarter revenue guidance. The Snapchat maker said it expects sales of between $540 to $560 million in the next quarter. The CFO, Derek Anderson, added that the company faces a headwind because its peak demand period between Black Friday and the end of the holiday shopping season will be 1 week shorter this year.
Snap's results are just the latest in a string of key earnings from U.S. tech companies before the month is out. Later today, Microsoft will report, along with eBay, PayPal, and Tesla. Amazon and Intel will then release earnings on Thursday. And next week, Alphabet, Facebook, and Apple join the fray.
And talking about chip makers, shares in Texas Instruments plunged nearly 10% in after-hours trading after the U.S. chip maker issued a weak outlook, citing the impact of trade tensions. The tech company said it expects revenue in the fourth quarter to come in below analyst expectations. It also missed top-line forecasts in the third quarter. Now, Texas Instruments had previously warned that a slowdown in demand for microchips would actually last a while. So that was the performance of Texas Instruments in after hours. Let's take a look at some of the European chip makers, because it is having knock-on effects. We've got Dialog Semicon in Germany down about 0.5 percentage point, ASML down 1.3, ST Micro in France leading the underperformance today, down 2.3%. So the read has been negative for European chip makers. Let's bring in Rupert de Borgrave, co-portfolio manager at Blue Box Asset Management. You specialize in technology and tech stocks. I want to start by asking you just your read for the semiconductor space after the results that we got out of Texas Instruments. We're seeing an impact on European chip makers. It sounds like the outlook is pretty grim. And yet, I look at the semiconductor ETF, SMH, and that's up 40% year to date. So what's going on?
Well, there's a disconnect between the short-term quarterly results and the longer-term secular trends. So, in general, if you're going to invest well, you should probably just ignore the short-term noise and news flow. In this case, TI is, as we know, an incredibly high-quality business. It's exposed to very diverse end markets. And even if they've given pessimistic guidance here, frankly, if it's dropped, it's probably a buying opportunity on a longer-term view. Now, we don't know where the full ramifications will come of the trade war. These are unknowns. However, we do know that the global economy is still continuing to grow. Even if the IMF gives a negative forecast, that still means plus 2.5 percentage points of real growth per year. And we know the US economy is holding up just fine. It's very, very robust.
So obviously the tech sector is very much exposed to the trade war from a supply chain perspective. Have you observed that many US tech companies have actually modified their supply chain throughout the course of this last year in anticipation of further tariffs and in anticipation of the political backlash now that goes along with having a big exposure to China?
Well, it's a slightly more complex question than you may realize. I don't think that there's a sign of a very significant shift in what you're calling supply chains. It's a bit like trying to turn around the Titanic. So, yes, of course, the companies across the board may still be trying to find the best sources of value. And yes, they may be at the margin substituting for Chinese suppliers, responding to political pressure. But ultimately, they're just going to find the path of least resistance. That's what they do rationally. So it's more about the end markets, I think, than about supply chains. And in that sense, it's more about the trend growth that matters rather than a short-term warning sign that they've given.
You talk fairly optimistically from a long-term perspective, suggesting we could look through the noise, as certainly investors could, and believe in the long-term value of these tech companies. Looking at one in particular, Facebook, they tried to make with Libra. It's obviously faced a huge amount of regulatory backlash. Its initial partners have pulled out. I mean, strategically and reputationally for Facebook, this was a real opportunity for them to change course. But what does it mean for them to have seen this effectively roadblock to them doing this? What do you think about a company like Facebook on a long-term view?
Well, we don't have Facebook in our portfolio. I think that it's quite significant that Libra's partners, including PayPal and Visa and MasterCard, have essentially pulled out of the program. That doesn't surprise me or us at Blue Box in the least. Apart from anything else, Libra is effectively trying to bypass central banks and is therefore a threat to the state. So it's not very surprising if eventually the state retaliates. It's an anarchist charter, Libra.
And in terms of the earnings season ahead, we've got some results due later today and tomorrow. What are the key themes you're going to be looking out for in the results coming through this week?
Well, as I said, personally, I don't pay that much attention to quarterly earnings. If you look at Amazon and Microsoft and Google or Alphabet, they just plod along. They don't care that much about quarterly results.
Your biggest holding is Microsoft.
We have Microsoft, that's true, yes.
And what is the investment thesis then there, if you're not looking at the quarterly earnings?
Well, with Microsoft, there's secular growth and shift to public cloud, digital transformation across the board of Fortune 500 companies. These trends are not going to change just because there's a short fall in a quarterly result. Microsoft has, you've got Amazon, Google, and Microsoft in public cloud. Azure has a slightly different offering. These are also incredibly strong businesses from a financial perspective, very robust cash generation. Microsoft has performed incredibly well, but it's still not that expensive for the growth outlook that it has. So I would look at the quarterly results and just probably not do anything.
All right, excellent. We'll leave our investors with that, our viewers with that. Robert Borgrave, co-portfolio manager from Blue Box Asset Management. Thank you for taking the time to speak with us today. A quick look at U.S. futures before we head out. As you mentioned, there are a lot of earnings to watch out for in the tech space, not least from Microsoft coming up a little bit later as well. But this is the picture for the three indices, S&P, Dow, Nasdaq, slightly below the flat line, leaning a little bit more negative in line with the sentiment in Europe. But that is it for Street Signs today. I'm Joanna Versace.
And I'm Juliana Tattlebaum. Worldwide Exchange is coming up next.
When you look at the world,
Car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel-good car buying, all in one place.
Carry on, choose findandfundmycar.com.
It's hard to find a children's gift which doesn't have a short shelf life. They'll eat all the chocolates in 5 minutes, finish their video games by the end of the week, and grow out of their trainers before you know it. So instead